Stocks ended the first half of 2017 with quite the bang, as you can see from this picture of the S&P and Dow Jones Industrials year to date. But will the fireworks continue as we kick off the second half of the year? First day of trade is almost done for the second half. My next guest, with more than $3 billion in assets under his belt, says stocks will turn up the heat. He's got 3 money plays that he says will sizzle in your portfolio. Let's bring in Matt Roddy of Rockland Trust. Great to see you, Matt. You just gave us your crystal ball. You think that these markets are going to sizzle, but what will get them there? What will spark the fire?
Yeah, I mean, sizzle might be a strong word, but what I think is going to help us is just this earnings growth that we've had. We had 14% earnings growth in the first quarter. We're poised to have almost double digits or around double digits again this quarter. However, we're going to have to see that earnings growth continue out for 3 or 4 more quarters to really support these valuations. But there are companies out there that are doing extremely well, and I do see the earnings growth and feel like there's some real validity to their growth potential.
Tech stocks were some of the best performers in the first half of the year. We have a lot of them doing rather well today. But beyond today, do they continue this run that feels a little bit like a momentum play that you want to be careful of? They get exciting, and when you start to hear people say, well, yeah, most of them have high valuations, but it's justified, I start thinking of the dot-com bubble.
Yeah, I would agree with you. I mean, tech is a little rich right now. The expectations for growth are rich. There are some really strong players that are still out there with values. Google certainly comes to mind as a stock that we've owned since April 2015. We've had a great run. We actually added to it in February of this year, right around these levels. It sold off 8% in June based on the EU fine for 2.4 billion euros, but it lost almost $50 billion in market cap. So I think there's some value in Google, but a lot of other tech names do look a little rich, quite frankly.
You like Zoetis, Nike, and of course Alphabet, which you already mentioned. Is there a common thread between these 3, what seems like a disparate group of names?
Yeah, all global leaders, absolutely. Zoetis specifically, global leader, in animal health care, which is not a well-known industry, but they do 60% of their business in production and livestock, 40% in companion. They don't have to deal with the third-party payers that we have to deal with. They've got some regulation, which keeps competition out, but not as much as the regular pharma companies have. Really strong. And then obviously Nike, global leader, global brand leader. Doing great, had a great earnings report recently.
And as a member of the Dow 30, it can say the Dow closed up 4 points, although we're losing some steam here as the closing bell rings. Matt Roddy, thank you very much.